Hello, everyone. Welcome. Today on the final bar, my guest is Bob Lang from explosiveoptions.net. Going to give us a big picture view, looking at small caps, also a key sector you want to pay attention to. If you like uptrends and you like the persistence of uptrends, you're going to love today's trading. If you missed it with the S&P continuing to the upside, up over 1.5%, but a lot of themes to tease out, especially small caps, up over 6% today. And that plays on, I think, one of the keys themes that Bob's going to talk about. Ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to the final bar. My name is Dave Keller. I'm the chief market strategist here at StockCharts.com in a somewhat rainy Redmond, Washington. Thanks for joining us every weekday after the close as we look at these markets together through the lenses of technical analysis, sentiment analysis, investor behavior, psychology, breadth, price, and most importantly, the message of the markets themselves. I'm often asked when the market is in an extended bull run, which I think by any definition you would consider where we're at right now. Doesn't mean we can't continue higher, which is certainly what we're seeing on follow-through days like today. But overall, the question is like how you deal with it. And I think if you're not a trend follower at this point in the cycle, I hope you have adapted to become one, because there are plenty of bad times to be selling on the way up. And I think if you're trying to pick a top, one of the most difficult, most painful things to try to do is pick a top or pick a bottom as it's happening. Those sorts of things look really clear in the rear view mirror, but I will tell you, having been through a number of major market cycles over the years, it is incredibly hard to do it as it's happening. It's much more easily afterwards. So I found trend following to be a really good toolkit. And in that case, if that's what you're doing, then charts like the S&P, charts like Tesla, things that are in consistent uptrends, you assume that that's continuing until proven otherwise, and focus on the message of the charts themselves, which reflect investor psychology, the fundamentals of the stocks, all of those things and more. We have some great guests coming through the show, and I'm really happy of the guests we had last year. I think we're going to continue to upgrade the quality of guests. I think today's no different with Bob Lang from explosiveoptions.net. Excited to talk to Bob here in a minute. Next week, we have John Kosar from Asbury Research joining the show on Tuesday the 12th. On Wednesday the 13th, Doug Bush from Chart Smarter from New York. And then on Thursday, Julius DeKempener from RRG Research is going to come back and join us. Also, happy to announce, I've been mentioning the Market Outlook 2021 special that is coming. Happy to announce it today. It's called Charting Forward 2021. It will go live on Saturday, January 16th on the channel and on our YouTube channel as well. It is going to be a ton of fun. We've lined up a fantastic group of experts, all of which are answering a series of questions. Where do you see the S&P over the course of the year? Where do you see gold at the end of the year? What about large versus mid versus small? What stocks in particular do you think are going to outperform? What sectors are set to outperform and underperform? We're going to mash up all those responses and give you this incredible sandwich of market commentary from some of the top macro and stock pickers, macro analysts and stock pickers that we know. It should be a lot of fun. It's coming up January 16th, called Charting Forward 2021. Let's get to our market recap. As I mentioned, by any definition, this is an extended bull market. And you'll notice I'm using the word extended, not overextended, because I don't think that just the fact that something is up a lot, I hesitate to tell you that that means it should be exhaustion, right? An exhaustion of buyers is something we can track from things like momentum and sentiment and all of that. I think the question is, at what point does the trend stop going higher? Where do you get signals of an exhaustion? I think when you think of the technical toolkit, you have to differentiate from leading indicators, things trying to anticipate trend exhaustion, and lagging indicators, things meant to qualify or confirm that a trend has actually reversed. And think in particular about your toolkit and make sure that you're looking, if you can, look in both. I tend to characterize things as a red flag indicator, something like RSI perhaps, or others, that are how far a stock is from a moving average, may tell you maybe an early warning that something might be overextended. And then you wait for the breakdown, you wait for the confirmation that that's actually happened. Having said that, let's look very quickly at how things played out. The S&P closing just above 3,800, which is a nice follow through, finishing near the highs of the day. A nice spike out of the open, pulled back a little bit, but finished in a position of strength. Small caps up over 6%, and we talked about some of the different benchmarks are weighted a little differently. We talked about that yesterday, I want to say, or Tuesday's show, one of those, and so small caps certainly continuing to drive higher. That's a theme that's not new. We've talked about this rotation from mega caps to small caps. This is just a continuation of those trends that we spotted, toward the end of last year. The NASDAQ really driving things higher. Technology was the number one S&P sector. If you look at the chart of the FANG stocks, this is done pretty, done very, very well. And if we look at $FANG, which is not just the FANG stocks, it's sort of FANG and other things as well. It was up 2.5% today with a nice, nearing another 52-week closing high. So a nice run for a group of stocks and a nice move today for a group of stocks that actually were underperforming yesterday. Yesterday was sort of tech underperforming and everything else sort of hanging in there okay. Today was back to technology leadership, back to mega cap tech leadership, back to the FANG stocks doing just fine. With some other asset classes very quickly, we've talked about the importance of the 10-year yield and 1%. That is in our rearview mirror now. We broke through that yesterday for the first time in quite a while, continued that up move today, and that speaks to the weakness in bond prices. That's what's rolling over. The dollar actually bouncing up a bit after finishing yesterday at the lows. Dollar a little bit higher, and that theme of non-U.S. versus U.S. and the impressive relative movements that you've seen in global stocks has certainly been a theme that has been emerging for quite a while. Today, though, a bit of a mean reversion there. Also with things like gold and silver, which didn't have a great day, not a horrible day, but down just a token amount. Worth noting, though, that energy did just fine, which is what allowed the energy sector to be the third from the top. And finally, I have to mention Bitcoin, which briefly touched 40,000. And it's funny, not too long ago on this show and elsewhere, we're talking about 20,000, and which had been the all-time high. The question was, can Bitcoin power above 20,000? The answer apparently is absolutely. And I wrote a piece not right around that level saying Bitcoin 37,000, which seemed absolutely outrageous. We reached it in the last 24 hours. So, the question now is, where do we go from here? The projections I've now seen are going, many levels further above this in the hundreds of thousands and such, speaking to the long-term uptrend of here. I think with something like with Bitcoin in particular, obviously a ton of volatility, but when I think of something that's overextended, when I think of a chart that represents or embodies the word euphoric, I don't know if I find something other than Bitcoin probably to illustrate that at the moment. But for what it's worth, that's what it's doing. Let's look at some other charts here to wrap up our market recap. So, the chart of the S&P continuing higher. I'm often asked, what do you do here? And I think there's different things we can do when a market is continuing to new highs. I think number one and most important is to become a trend follower. If you are a contrarian by nature, that's great. But when a trend is working and it's working consistently and the thing continues to go up, you don't want to fight that. You don't want to continue to call a top as something continues to go higher. And any investor in anywhere will have a story probably earlier on in the career where they sold something way too early. They sold something when it was up 10% and lost out on the 200% gain that followed. And don't be that. Don't have too many of those stories. Have some so you learn, but don't have that be a recurring issue for you, right? It's okay to take some off the table, but make sure you lean into things that are working, right? Let the winners run is something you've probably heard a trader's mantra, and that's something to certainly keep in mind. I always coach people to look at where we're at, look left on the chart to identify key support and resistance. When you're at all-time highs, you're sort of above there. Now, what a lot of people do is they will take previous patterns. They will use Fibonacci retracements or Elliott wave counts or Gann angles, all sorts of different methodologies to project forward when something's at all-time highs. You will hear me do very little of that, only because probably from my experience as working with institutional money managers, when something was working and when the chart was going higher, the last thing you would ever imagine doing was selling it. You just wanted to continue to ride it and hold on to that as long as it continued to work for you. So I'm programmed more to turn into a trend follower, and when something breaks out and it's a consistent pattern. It keeps making higher highs and higher lows. As long as that pattern continues, and as long as the highs keep getting higher, the lows keep getting higher, which means at some point we'll have a pullback. That's totally reasonable. At this point, 36.50, 36.30, that's the pullback level that we saw here in December. That would be a reasonable pullback point. The 50-day as well would be somewhere I would look, which is just above 3,600. So that's sort of the level you would look for a pullback to come down to. If it holds that, then the uptrend overall by definition is still in place, and you should be okay. If it breaks that, that's where you have to start to question a little bit and think if there's some additional work you need to do on it. Just to wrap up, overall, I think it's worth noting we have our scooter rankings, our StockCharts technical ranking, which ranks a large number of stocks in a large cap universe, a mid cap universe, a small cap universe, and then ETFs and industries we have as well. Tesla has been the #1 ranked stock in that scooter ranking for a number of months, just overtaken today by ENPH, which is, if it's a name you're not familiar with, it's in the renewable energy group. It's called Enphase Energy. Plug Power, which is in that same group, is the #1 mid-cap ranked stock, which is one we have talked about for quite a while. That's this one here. Actually gapped higher by about 35%. Had news after the close yesterday. It was halted after hours and then opened up pretty good today. Continued to push near the high. So the two top ranked stocks in our scooter rankings are in the same group, renewable energy equipment, which also happens to be the group with solar stocks. That's where you'll see things like FSLR is probably the one that, if you know a solar stock, this is probably the one you're familiar with, but there are a bunch mid cap, smaller cap names in that group as well. FSLR is retesting new highs, threatening to make a new 52-week closing high today. Might have just done it by a tick or two, but up almost 6%. So that group overall has done very well. That obviously speaks to the prospect of a Democrat-controlled Congress and what that means for clean energy and so forth. So ETFs with exposure to the group and individual names certainly having a pretty decent day on a day like today, given what's happened in the last 24 hours or so. That is our market recap. So many themes to try and tease out. We just want to touch on some of the key charts that have come through our process. We need to take a quick break. We'll be back with my guest, Bob Lang. We'll see you in a minute. Hello, everyone. Welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. So appreciate you joining us every weekday after the close as we break down the market activity and look at some of the key charts that should be top of mind as you go through your own process. As a reminder, we'd love to hear from you. We're going to do another mailbag segment in tomorrow's show. We'd love to answer one of your questions on the air. A couple ways to get your questions to us. Number one, via email, thefinalbar@stockcharts.com. Number two, on Twitter, @FinalBarSCTV. is our Twitter handle. Just put a comment there and tag us. And then finally on our YouTube channel, just put a comment right below the video. We'll capture all of those questions. Would love to hear from you and hope to answer one of your questions next time on the air. I want to welcome on my guest, Bob Lang. Bob's the founder and chief options strategist at explosiveoptions.net. It's great to have you on the show, Bob. We talked about you recently moving from the West Coast to the Northeast of Boston, where I spent a number of years. And congrats, good luck on the winter, and welcome to the show.
Thank you, Dave. It's great to be with you today. And I'm just really trying to get adjusted here to the different weather that we have out here on the East Coast versus the West Coast.
You're going to be fine. It's an adventure always. Let's get to your charts. You sent us a couple of charts ahead of time, and obviously, so much happening in the last 24, 48 hours. Geopolitically with the markets themselves. Start with small caps, which clearly had an incredible start to the year. Start us here. What are you seeing?
Yeah, Russell 2000. One of the things that I've noticed with Russell 2000, Dave, is that this tends to lead markets up or down. So if you notice on the chart here that I've put in a little line graph there from about the end of October, which is just before the election, to about now, and we see that arc was pretty steep. And what I like to notice is that this index started outperforming the NASDAQ and the S&P 500 and the Dow Industrials right around that point. And ever since then, this index has been on fire. The rut was up 20% November, and it continued on in December. Actually outperformed all the other indices as well too. But what really caught my eye here was yesterday, and you can see there that we broke out a symmetrical triangle on really strong volume yesterday. The small caps, which you mentioned earlier, have a lot of energy names, and also there's a lot of banking names. These stocks were real strong yesterday, and an index of 2,000 stocks is going to lead the way.
It's an interesting chart. It's a fascinating one, and we again the small cap have been doing pretty well in the fourth quarter, especially, right? They really rallied, but an impressive start to this year for sure. Now, chart number 2 is looking at transports. A lot of people think of transport just in terms of Dow theory, looking at the industrials and the transports. What are you seeing here?
Well, the same sort of thing, and look, we see the chart from late summer and late June till now. We see a series of higher highs, higher lows. It's a classic technical pattern of bullishness. And more recently, we saw a little consolidation here from about the early part of December to just a couple of days ago. But it also broke out much like the Russell 2000 did on good volume yesterday, and followed through today. So the transports are an interesting development here. It carries airlines, it carries automobiles like Ford and General Motors. It also carries the rails. And I think that with the change in Washington, with the potential for some infrastructure projects coming along, the rails are going to be where you really want to be, and they have a large part of the market cap of the IYT over here. So this is an area that I'm looking at. Names like CSX, Norfolk Southern, NSC, Kansas City Southern, KSU is one of my favorite ones. So these names are the ones you got to take a look at over the next couple of months.
And I can't help but notice you're indicating the MACD rolling up and generating a buy signal, which pretty much all of these with the breakouts out of the consolidation phase. Your last chart is the XLF. So financials certainly have had a decent start. How are you looking at this one?
Well, yeah, you see on the bottom there, I've circled on the Chaikin money flow, the super strong money flow there. It's been above zero since the middle of November. No accident there, as interest rates have started to rise. The financials are definitely a place you want to be. The banks have said that they're going to be buying back more shares. You're going to probably be increasing their dividends as well too. And again, this is another classic breakout from an upward channel that I put in there from the beginning of November to the last couple of days, and we broke out today. I can see XLF getting up to about the low 30s over the next couple of weeks, maybe even a month or so, and then before it stalls. But the cloud is strong, and MACD just crossed over, and it confirmed for a buy signal just the other day. So financials look pretty good too.
And these are 3 great examples, and it's hard not to be fairly optimistic hearing you talk through the 3 of these, Bob. And they look very, very good. I'd love to ask with this last one as an example, something that looks so clearly like it's in offense mode and it's heading higher. What would you see on this chart? What would you be looking for as a warning sign that things were starting to, not as rosy? Would it be the Chaikin money flow starting to rotate more negative? Would it be more of a breakdown in terms of price, or would the cloud be involved? What would you be looking for to tell you that things are not as positive as you might expect?
At this point, Dave, what I would say is that if we saw a big outside day, a big reversal candle in the XLF, the price chart, the other indicators are going to be slow to catch up to that. It's price action you really want to pay attention to right here. So if we do get a reversal candle, let's take a look at, if you look at the chart, go back to August, and you can see once we tag that 200-day moving average, looks like it's about the 13th or 14th, we had a big rejection there, and we came back in for about 7 or 8 days after that. We corrected quite a bit. And it's consolidated a little bit more. And then we also had another outside candle at the beginning of September, and that was the start of a more severe downfall. So that's something I'd be looking for. This is the name that will often have reversal candles, and that's your signal that look out below.
Bob, it is always a pleasure to have a power user of StockCharts, someone who knows the capabilities better than I do, and I can tell from your charts you are in that bucket. It is such a pleasure to have you on the show. Wish you well. Stay warm in the Northeast, and we'll talk to you again soon, all right?
Thanks for having me, Dave. Appreciate it.
That's Bob Lang. Bob's the founder and chief options strategist at explosiveoptions.net. And, and again, hearing Bob talk through the charts, I hope what you got out of it is similar to what I heard, which was it really is a message of simplicity. It's looking at the message of the charts. There are, a couple indicators on there, and that's totally fine. It's all about having a way of processing all of those and looking at the confluence and the agreement and disagreement of what's on there. I especially like his comment about looking at the candle patterns. When the trend is positive, you'll often get some sort of negativity, some sort of exhaustion signal in the short term, something like a candle pattern, an outside day, a bearish engulfing pattern, something which tells you the things might be changing. And then you'll start to get the confirmation after from some of those trend following techniques, the lagging indicators that he was employing there. It's a great take, and it's hard not to agree with the breakouts that he certainly identified there. Let's move on with the show. Our next segment is called the Sector Deep Dive. We like to occasionally go in depth on a particular sector, start to tease out some of the themes that you may find interesting. The way that I tend to do this, and we try to do a different sector every couple weeks or so, and I would say the way that I would suggest you do it, start with the big picture. I like to start with the RRG, which shows you the rotation. Start with the individual sector chart, sort of look at it, and then dig into why it is performing a certain way. And what I mean is look at some of the groups and some of the stocks that make it up. So what we'll do is start with the chart of the XLI. We're going to look at the industrial sector today. Just talk about how the last 12 months have sort of played out, where it's at right now in the cycle, and then we'll look at the industry summary page and break down some of the components of industrials in a little more detail, as much as we can here with a short amount of time. So the XLI, along with many things, clearly bottomed out in March. If you look at the chart of the XLI in its relative look, which is here at the bottom, this is the XLI relative to the SPY, so industrials versus the broader market. You can see that it bounced a bit out of the March 23rd low, but then underperformed for the next 2 months, really. And so what that tells you is, even though it was increasing in price out of the lows, other things were increasing a little better, right? We're doing better out of those lows. And these are sort of the early leadership names, things like tech and others that led very well out of the bottom. From there, though, things started to normalize, and you can see the green arrow I've illustrated here is when industrials really started to come in their own and start to impress on a relative basis. And really going into the end of November, the XLI was on a pretty good clip on a relative basis, outperforming pretty steadily. That all changed, though, the fourth week in November, and you can see for the last 6 weeks, really, industrials have been a relative underperformer, right? And this is when other things have accelerated into the December, into the end of the year. You can see the XLI actually made a peak in late November and then has had a steady sort of pullback. That's actually rotated higher. And if you think about some of the lines that Bob had drawn on some of his charts, you can see what I'm doing here is taking the swing highs. That's a poorly drawn trend line, David. Okay, there we go. So if I take the high there and connect it to some of those swing highs, you can see we've rotated higher. And what that maybe is a rally, sort of a bull flag pattern, which is a parallel pullback of lower highs and lower lows. That's now broken higher. We break above that swing high, which arguably we've now done in the last day or two. That suggests we actually have a nice further uptrend from here. So the XLI is an important one because it's actually kind of a diverse sector. It has a number of different things in there. It's not just one type of stock that's included. Let's dig into that a little bit more and see what we can see. So what we're going to do is go to the industry summary page. If you've not used this, go to Charts and Tools. You'll see on the right side all the different reports we can get to. Industry summary is this one. I always use the table view, but you're welcome to use whatever you want. And this is breaking down each S&P sector and then the way we categorize the groups within those sectors. So if you look here at industrials, I'll sort it alphabetically and you can see what types of names are included here. The sort of the stereotypical ones are things like the heavy construction names, things like John Deere equipment, those sorts of things. But also remember, it includes transportation. So it's going to be things like airlines, transportation services, things like FedEx and UPS. It's going to be railroads. So my guest, Bob Lang, was talking about, KSU and some of the other railroad stocks. Those are included in industrials. Waste and disposal services. So, other ones are included. So it's sort of a mixed bag of things, and aerospace defense. So things like Boeing and Lockheed Martin and those sorts of stocks as well. We don't have time to go through all of them. So the way that you can try to organize yourself is sort the groups by the scooter ranking. So we sort all of the industry groups by scooter ranking, by the strength of their trend. And you can see within the industrial sector, the number one group is heavy construction. We click on the name of the industry group. We sort that by the scooter rankings. You can see what stocks actually comprise those. You're going to find this essentially has a mixed bag of mid cap, small cap, and large cap. So some of these stocks you may not be familiar with. I'd encourage you to go through and dig in a little more. I like to hit some of the large cap names that you probably are familiar with. So something like Quanta Services, PWR, maybe one that you're familiar with. This is a 10 billion market cap stock. This sort of looks like the chart of the XLI, and what I like about this is the consistent uptrend, right? You can see this pattern of higher highs and higher lows. What I'm most impressed with is the number of times it has pulled back to the 50-day moving average, and before it gets there or when it gets there, you can see more often than not, you have this nice bounce higher. That's really interesting because in December, late December, we touched the 50-day and bounced higher. Again, going into a year end, the beginning of this year, same thing. And now we've broken to a new 52-week high, up about 2%. Today, the stocks in this, and also I should notice, teasing a new 12-month relative high as well. A lot of the stocks in industrials, in particular, in something like heavy construction, when you think about infrastructure spending, and again, that's a theme I've been talking about for a while. I remember when Larry Berman was on the show months and months ago, we talked about infrastructure and how that would certainly be a theme for the coming year. And as we got further and further down the election season, one similar pattern to either of the main presidential candidates was an interest in investing further in infrastructure. And that's where some of those groups are going to start to do pretty well. So if you haven't been looking at those names, I'd encourage you to dig into those a little more. Bob mentioned the railroad stocks, and if we click on the railroad group, this may be names that you're a little familiar with, but the charts overall have started to really impress. A number of these, the last time I was looking at them, which is sort of over the weekend, is pulling back to the 50-day, which is totally fine. A healthy trend pulling back to an ascending 50-day moving average more often than not is a pretty decent entry point, assuming that long-term trend is going to continue. What you'll see with a lot of these names is they've started the year off really well, sort of accelerating to the upside off of that pullback level. That was Norfolk Southern that we looked at. This is KSU, which is a little more extended. You can see it didn't even touch the 50-day in December, sort of accelerating and made a new 52-week high again today. So a lot of the railroads in very similar patterns at or near new highs this week as they've sort of moved higher. Union Pacific may be my favorite. KSU feels a little extended in that it's been at new highs. Others are sort of just bouncing off their 50-day. You can see Union Pacific, a bit of a base here with a high tested a couple times and now resolving to the upside in the last day or two. So some nice rotation higher there. The last ones, and again, we're out of time, unfortunately, to dig any further, but I would encourage you to look at the airlines. That's a group a lot of people like to pay attention to. When you sort this sector from strongest to weakest, airlines are not impressive in terms, relative to others, right? The average airline stock looks okay, and it's pulled back. That if you see that trend continuing, it could be an opportunistic entry point. But overall, I'd much rather see things that are in more established trends, able to push to further highs. Groups that do not impress are things like aerospace and defense, Boeing and other names that, again, don't look horrible necessarily. Some of them actually do, and they're at established downtrends of lower lows and lower highs. That's the way I would think of the industrial sector. And again, when you think of infrastructure, look at some of these groups that are doing well recently, and you'll see the patterns that are most impressive. Sorry, I said I wouldn't look at any more. I'm going to look at one more because FedEx and UPS are a bit of a concern. These are stocks that did really well and made a new 52-week high. FedEx did in early December. Since then, consistent downtrend below its 50-day and below its most recent swing low. So that's the type of chart I would most likely tend to avoid until you see some improvement. Oversold, which is very rare right now across the equity landscape. So we're taking a look at. We need to wrap this show. Go to the 3 and 3 charts, 3 minutes. Here we go. We are going to basically hit on the top ranked scooter stock in large cap, mid cap, small cap. The reason why we're doing it, because a couple themes will come up very quickly. Tesla has been the number one stock. I actually typed in the ticker until I noticed that it actually wasn't the top ranked stock as of today. It's been overtaken by Enphase. And don't get me wrong, Tesla is still the second ranked out of, 1,000 some names. So it's still just fine. But overall, it's been overtaken by a renewable energy equipment stock, ENPH. The uptrend has been very steady. It's been higher highs and higher lows, extremely overbought, which tends to mean you get maybe perhaps a pullback, but then at least one more move higher. And that's what I would probably expect there. Plug Power is the top ranked stock in our mid cap universe. We've talked about this name before. It gapped higher in a big way. It was halted after hours yesterday. A strategic partnership that came out up 35%. But again, That is great if you're long the stock, but that shouldn't have been the signal that things were changing, right? Overall, it's about looking at the pattern, and higher highs and higher lows have been in place on that stock for quite a while before yesterday. Finally, we have a biotech name, PACB, which is the top ranked stock in our small cap universe. You can see this one as well rotating to higher highs and higher lows. Folks, that is our show for today. Thank you so much to Bob Lang from explosiveoptions.net for joining us from the Boston area. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a good night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.